I have a slightly different view of what is occurring here. I've lived through many cycles, obviously, as everybody has on this call. What I find intriguing about the nature of this correction, if you want to call it that, or the potential of a recession, is that it is in the foreshadow and then the shadow of 6 trillion, basically 30 months, and not to expect inflation. Well, of course, that's why we have what we have right now, 40-year, new high in inflation. But at the same time, if you could figure out the printing presses were going to stop, you would be forecasting a new leg up. And here's my thinking on this. There's 2 bills right now in front of Congress. And so one is a watered down version of Build Back Better. This is very inflationary, but it's spent over 10 years. It means that management, the Intels of the world, the MDs, that also is inflationary. And you can sell it as something as defense to the U.S., but basically you're supporting idiot management. That's basically what happened. You're picking a sector. Taxpayers are not getting anything from it other than just to give their tax dollars away to idiot management. And I don't mean disrespectfully, but there's management that can execute and foresees the future, and that's why they're good managers. And then there's idiot managers. But the point is, there's a lot of unhappy campers in America today based on inflation around food and energy. This is the good news for investors. After that night, there will be total gridlock in Washington for the next 2 years. There will not be a single piece of legislation passed. It will be impossible to get anything done, and that's a great thing. That's a wonderful thing, because markets love Washington gridlock. And I think whether you want to say it's PE expansion or earnings expansion, and it may be both, we're going to continue this leg up. Now, not 30%. But if you have an option between making 8 or 9%, including div distribution and yields on the S&P 500 at a 17 to 18 PE, the narrative has changed to a soft landing for the first time in decades. Nobody gives credit to the Fed for ever delivering soft landing because they never do. Maybe because of the backwater of all this printed cash, they have that opportunity to do this. So bottom line is, so I make it very clear, bottom is in. We're going to be flatlining for a while we wait to see what the Fed does.
Why? Because I've noticed this in the past. As soon as there's a split, Senate, House, all of this stuff, it's good for equities.
They're adding a 1% tax to stock buybacks. Why would you do that? Why would you do that? Then they put a 15% minimum corporate tax in the U.S., an idea floated by Yellen all around the world. Nobody followed her. Now the U.S. is less competitive. The politicians damage bull markets. They've never run businesses. They have no idea what they're doing. They're just throwing this stuff out there to raise money. So bad policy. The whole point is, when you have a situation where Washington can move policy, more than 50% of it is bad policy. When you have total gridlock, they can't do anything. They can't damage anything. Listen, it's important to have government for many different services, but not for making economic policy. They're really bad at it. So that's why I point out, once you shut down the policy machine, markets get to move back up. I think in terms of allocation and distribution of your own portfolio, I don't care who you are, there is a place for fixed income. Now, we run a pretty fixed income desk here. We look at all credits, right from treasuries and govies all the way over to factoring for retailers. And the challenge we're having right now in pricing in risk is, in a bond situation, that's not a good outcome. And you could go shorter duration. But what's bothering me as a bond guy, that's how I started my career, is what BlackRock is doing right now. Instead of buying fixed income, and remember, they're trying to put to work billions every week, they're buying U.S. apartment buildings instead. They're reallocating away from an actual bond, covenanted instrument, and they're buying fixed income based on distributions of rent.
Because that's
not a good sign. Yeah, they have to, the average distribution from a pension is about 5.7% they have to send out every year. You can't get that from any form of fixed income without taking huge risk on leverage or duration. And so I think I get your capital gain play. You're making a call on interest rates. And I would tend to think you're going to be right in the next 24 months. They each put $200 million of equity into Circle in the F round at a $9 billion valuation, less the discount they got, which I'm going to assume is 15%. That is huge. Remember, this is a very controversial asset class. Stable coins are a shit show right now. And there you have the largest, most conservative completely compliant institutions on earth putting $400 million. I own a piece of Circle now on the F round beside Fidelity and BlackRock. And I did it because I saw them going into it. I would have never done that without the endorsement of such compliant SEC regulated entities making a bet in the middle of a shitstorm on stablecoins. It's a turning point for crypto. That's what I think. Listen, we were supposed to get policy just on stablecoins reviewed this month. They pushed it, and I'm talking about now on the Hill in Washington. They pushed it to September to consider it. I've been spending a lot of my time in Washington on these bills, and I'm not the only guy doing this, and I'm totally transparent on my interests here. I want to get some kind of payment system for my global businesses when we're transferring cash. I want to use USDC between here and Geneva. We index. I have an indexing business, so we're constantly, every day, taking US dollars. I could completely eliminate that with a payment system, and everybody knows that. So there's a lot of utility. Second reason you got to be bullish here is this. Both sides are supporting this, Dems and Republicans, because it makes the dollar, if you get a U.S. stablecoin policy in place, it makes it the default payment system of the earth. Not the Swiss franc, not the euro, not the British pound, not the Chinese yuan, the U.S. Now, you know there's a war going on between the SEC and the other regulators, turf war on crypto, but you can't deny crypto is here to stay. In fact, I believe in the next 10 years it'll be the 12th sector, the S&P. And I'm trying to make bets all through the continuum of projects. I own everything. I have 32 positions. I don't know which ones are going to work. I just need a few. Huge position in Ethereum, huge in Bitcoin, Solana, Polygon, Helium, Pollen, the new one I just took on. There's all kinds of projects. And the thinking for me is this. You go teach a class of MIT graduates in engineering right now. I do guest lecturing there. 1/3 of the class are entrepreneurial. They have no interest in working in any of the 11 sectors of the economy. They want to work on the blockchain. They want to be in crypto. You can't pour that much intellectual capital into something and not have great outcomes one day. It's like being at the beginning of the internet. And I'm talking about the smartest, brightest men and women from around the world saying, screw everything else. I want to work on crypto. But you've got to remember, we've been talking about the merge for 5 years. I'm a skeptic till I see it happen, because you got to think about who loses in the merge. You know, and if you're a miner right now, you're not loving this merge idea. And there's a lot of capital tied up in that. And so when it happens, I'll believe it. But we have seen this thing punted down the road 5 times. If one of my core businesses is to index for sovereign wealth. 70% of capital that's invested around the world, 75%, is in sovereign wealth and pension. And so I can report to you faithfully that they own no crypto, zero. And so for all the excitement, and the reason they don't is they don't have any infrastructure to be compliant. It's not just that they're not allowed to because it's not regulated. They have no infrastructure to market 500. You don't move the market with, that. And so at the end of the day, they'd say, okay, index to S&P, X oil, X. So when it came to Bitcoin, they said, look, we want 50 basis points. Come up with an indice that is proxy to the risk on Bitcoin. Bitcoin's the only one they care about. And so everybody designed these indexes. Now, the morning the SEC memo came out calling for auditors to sign the carbon credit claims. In other words, if you're a S&P, within minutes, everybody that was in Indexer got a phone call from Sovereign Wealth saying, dump every public mining stock in Bitcoin you've got, because none of them are going to be able to pass this audit. We were selling into declines of 20% an hour. And I didn't want to do that, but we did it. You go look at a chart of Marathon or Hut 8 or Hive. That was the indexers dumping those stocks. And now there's no way they're going to give proxy for Bitcoin, because half the world won't buy them because they're polluters. They're dirty miners. So now you have to do mining with hydro, or you have to do mining with nuclear power. And the biggest investors in those facilities, like the one in Norway, this company called BitZero, private, is the UAE. Another indice which I think is a foreshadow of demand, because when we get policy on Bitcoin and it gets indexed to 1% in a $900 billion fund, that's really good towards getting that price up to 100,000. That's the only way you're going to get it, because if there's volatility, you've always got the underlying bid from the sovereign wealth fund. You have to be bullish if you believe in regulation. That's my point. No, get policy. Will they get somebody in Washington to say that's okay if you're a public pension plan? They need the policy on crypto in the sense, even if they only regulate Bitcoin and Ethereum. And so many people in the crypto world are against regulation, but I say that's false. If you get regulation, you get more capital. You've made a great case right there for why we want policy on Ethereum. And I think for financial services, I agree that the gas fees are a joke. That's the problem. This will help solve for it. But if that becomes the default platform for other digital assets, that will help. But in the immediate term, the demand is for 1% to 3% of portfolio as standard. These sovereign wealth portfolios look like this, except the really guys do their own index. They basically, they rent indexers like me, and they say, design this, because most often those commercial products are doing 20 basis points to 45 basis points. They're never going to pay that. You're lucky to get 2 basis points out of them. And so that you do the work, and then they have custodial. And that's where it gets interesting, because Bitcoin trades 24 hours a day, and all crypto does. And that's a new beast for the compliance departments of these giant funds. The point is, I'm trying to get ahead of the day, because we're all agreeing that at some point we're going to get policy. I need to be long before that happens, because that's the reward you're going to get, is when that stuff gets indexed, and whoever gets to index it, the demand for at least Bitcoin and Ethereum out of the beginning is insatiable. So the DGM, which is let's talk about because this is a fantastic question. Last month, I got my UAE citizenship, and I did that to go through the scrutiny of the background checking so I could act as an operator and an indexer in that market and a financial services entity. Because when we get the SEC to approve this, whatever approval it is, and we'll build you the infrastructure so you can mark to market it so that you're staying compliant in your mandates, then they're going to put on their weighting. And the way you should measure your enthusiasm, or curb it maybe, is they struck down the Bitcoin ETF. Your portfolios are up, 20, in some cases 23%. I mean, our 20% position went down to 15.2. That's pain. That's pain, my friends. And our desk was saying, what do we do? What do we do? I said, we do nothing. Where we know we're in this volatile asset class, and we're going to have to wait for some policy. That's why whenever I talk about crypto now, I'm pro-regulation. I want the sovereigns backing me up with bid every night. I say this is a good thing for the market. Scraping the patina off the bad actors, the idiot managers, the over-leveraged, unsophisticated traders. It's important to do that, because it makes the rest of this ecosphere very, very stable. But these players are out of the market, and that's important. The DNA of the remaining survivors gets better. That's my whole point. I'm pro on this thing, and I want to scrape out the idiot management. More scraping of idiot managers. It's better for those managers that remain and survive.